Welcome back to Market on Close. I'm Marley Caden. Let's talk some Bitcoin after it rallied this week to an all-time high, continuing its strength that it's seen since the beginning of April. Joining us now to talk about it is Phil Strebel, the Chief Market Strategist from Blue Line Futures. Phil, thanks for being with us this Friday.
Yeah, thanks for having me on.
All right, let's talk about Bitcoin. It's been quite a few days for Bitcoin, not quite as good a day today, but give us your take on this week's rally and if it can continue.
Really incredible. I mean, you got a 5-day rally here on the world's largest cryptocurrency, hitting a record high. Bitcoin did turn sharply lower here after President Trump threatened those tariffs on both the European Union and the Apple iPhone maker. But if you look at Bitcoin, I mean, the euphoria is there. I mean, you look at open interest reaching an all-time high on Bitcoin options at about $48.2 billion. I was pricing up some of the call options going farther out, and we were kind of laughing, but it's something that reality could happen, where you look at the June contract and you look at the micro Bitcoin options. There's about 100 contracts in open interest at $400,000 of Bitcoin. So people out there are really just drinking the Kool-Aid on this bull rally. I believe that prices could get there at some point, but I don't know what kind of catalyst would take it up there within the next 30 to 45 days.
So right now, I'm pricing out Bitcoin as we speak. We are looking at it at just under $109,000 right now to 400,000. What do you think is a more realistic level? You said you don't think we might quite get there. Where do you think we could get realistically?
No, I think that the markets, they work in a little bit more organized fashion on that. I mean, obviously there were plenty of announcements that have come out that could, be some market moving impact here. But I think realistically, I'm seeing the floor has definitely been raised on the price of Bitcoin. And I think that, perhaps the 70s, the 80,000s, those could be a day of the past, where if we get a deeper correction, it would be into the 90s, where I anticipate a lot of people kind of reloading that maybe let some of those contracts go near the all-time highs as the dip buyers would emerge. But realistically, I think that if you look at the channels that we've gone up, the series of technical patterns that have been rising, I believe that that type of trend should continue. And realistically, 150, 200,000 by year end is definitely could be in the cards.
So with the technicals supporting that crypto does have room to run higher even, would you still consider Bitcoin a risky asset, or is Bitcoin moving into a more stable asset, perhaps as like a new gold?
That's a trick question. I think the reality is that, let's face it, it is a risk asset. I mean, you can't even touch the thing for what it's worth. And a lot of people, not too many people have actually used it for what it is as a currency other than a small investment vehicle. I mean, you're not using it in your day-to-day affairs, like how you do with US dollars and credit cards and things like that. So it is very tied to the NASDAQ as a speculative investment. It does not work well in deflationary periods. Every time we've had a deflationary period recently, you've seen Bitcoin trend significantly lower. So if we start to see those recession risks come back and things like that towards the back half of the year, which we're not pricing in a recession at all, but if it was to develop, that would put Bitcoin in a much more defensive stance, and we would most likely trend lower. One thing to note, though, is that while we were still pricing in a recession just recently, Bitcoin was one of the leaders that took off to the upside as far as risk assets concerned. It seemed like the dominoes had fallen, and Bitcoin was the first one to go. And then you see the NASDAQ, then you see the S&P 500 and other risk assets follow.
So the technical supporting that potential to run us up, you say end of year up to potentially 200,000. What do you think some of the positive catalysts are that we need to see us hit that number by year end?
I think you need to see a robust economy, better economic data, the labor market remain firm while interest rates and inflation come down. So if you get that combination of those things, you continue to see companies and corporations incorporate it in their balance sheet. That also plays a massive role because of the limited supply in nature. I think more adoption from different states having Bitcoin reserves, stable coin needs, things like that, really cement Bitcoin as a long-term viable asset. And I think it's an appreciating asset.
So you mentioned interest rates, which leads me to have to ask you about this week's strength in treasuries. We've been talking about our bond yields and our treasuries all day, seeing so much action here. What are you keeping a close eye on?
Quite incredible. I mean, I said this during the financial crisis when you saw, Portugal and Spain and Greece, where their yields, because of the fiscal irresponsibility, had shot through the roof. And I never understood how U.S. yields had remained so low for so long during times of crisis. And now it seems like reality is setting in, and we're being priced as one of those countries where there's just a little bit more risk out there. Now, I don't think that interest rates will end up holding at these elevated levels, but for any at least not continue to rise at the trajectory they are. They may hold elevated because of rising inflation and input costs, but I think that over time we'll start to see those yields come back down to more normalized levels, especially when the Fed starts to cut, which we think would be closer reality to September and December. And you may get a larger cut at one of those where it's 50 basis points.
And what kind of setup do you think the Fed needs to see to make that cut in September and to do the 50 basis points, which is a bit more than what's being predicted right now? What do you think that they need to see through the summertime to feel comfortable doing that in the fall and get some of these rates down?
I really think that this is a battle between two minds. It's Jerome Powell and Donald Trump, and I think that they're really in the ring sparring, because the reality is that I understand the Fed and the Fed's defensive nature on cutting rates, because you can't cut rates if you don't know what tariffs will bring, what kind of ramifications towards inflation that could come down the pipeline. I mean, look, it looked like we were kind of smooth sailing and things like that. And then all of a sudden, the administration comes out with 25% levies on Apple, threatening Samsung products, threatening European Union tariffs. One thing that I did know is that back when I used to do this program about 10, 15 years ago, I used to wear Trump ties, Trump signature ties. And I did look at one of those. It was made in China. So just so you know.
That just made my Friday, Phil. That was a funny thing to share. Thank you. Of course, Phil Strebel, always a pleasure to have you on the show from Blue Line Futures. We appreciate your insight. And